Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands, 12th day of February 2016, and this is the Daily Report for Gold and Silver, our weekend review, and we are, as we do on Fridays, combining this with trending markets to get a good overall picture of the entire breadth of the market this week. And wow, what a roller coaster we saw this week. When we talk about oil, a tremendous recovery today, up about 12%. Equities markets, after trading dramatically lower yesterday, that is trading dramatically higher today. And gold, which was up in double digits, breaking with a fever through $1,200 an ounce yesterday, is trading off, but off by just a little bit. As you can see on the screen, currently trading at 1238.96, call it 1239. It has traded to a high today of 48.22, 1248.22, and a low of about 1231, 1232. That, of course, is important because we are long gold from 1117, and yesterday we did move our stops to just below 1230, so our stops were safe, at least for the moment. But regardless of when we're stopped out, we're going to get stopped out with a sizable profit. We'll be looking at that along with the equities markets, crude oil, US dollar, and silver, all on today's weekend review. Traders, absolutely no doubt, we have seen this market run rampant throughout the week, and it's been absolutely a roller coaster ride when we consider the kind of activity we've seen in multiple markets. First chart that I do want to look at today, of course, it pertains to our current trade. We are long from approximately 1117. It's the second leg. We've already pulled profits once, but I want to kind of break down how I see this market at this point. We can certainly see that when we hit these bottoms here at about 1045, roughly in that area, the market truly took off from that point and actually rallied up to about 1111. Now, this is a basic fib retracement, and as you can see, from that 1111, it actually corrected down to about 1070, which is exactly a 61% retracement of this move up. From there, we saw this market really have an accelerated move. There really isn't any area where we saw any kind of congestion except for this 1111 area, and you can see that right in here. But we've had this market truly accelerate up to the most recent highs that we hit at around 1263. Now, we currently have stops just below 1230, and my sense is we could easily see this market correct a little bit. In other words, what I believe we could see is a wave one, a wave two, a wave three, if we do get weakness here, because the key right now is to look at a couple of tops, and you have this one top that comes in at roughly 1230, which is why I believe that if we are going to find some sort of support in the market on a technical basis, this would be the first area to look at it, and that's why our stops are just under this particular point on our long. But should the market succumb and go into a correction mode, my sense is we could see it trade as low as about 1181. That would be a 38% retracement of this move here. And then from there, I expect it to come in and actually breach 1300. That would be the sense of what I have in the market currently. As for what I believe we might see, so traders, we use that daily chart really to take a look at what our short-term view of gold is. And I want to take a second to really look at our more long-term view of gold. And when we do that, we really have to bring in the current Elliott wave count that we are using, which is under the assumption that this long move up from really about 700 up to our historical and record top at 1900. My belief at this point is that was the culmination of a major fifth. The second assumption that I am making is that this long protracted move down really was our A wave, and it is a major A that would come after a major fifth wave. And furthermore, I believe that we can then subdivide that into a 5 count on the way down. This being our wave 1, wave 2, wave 3. I believe following wave 3, we went into a set of double compression triangles, and this top up here concluded our wave 4. And then we'll talk about our sub count. Of course, this is a major count. These in red are our intermediate count in terms of the Elliott wave count. And then we'll go into our minor count or sub count, which is in blue. So my belief is that we had, in terms of a sub count, a 1, a 2, a 3, a 4, and I believe we culminated our 5th wave in terms of our minor count, our 5th wave in terms of our intermediate count, and also, most importantly, culminated our long corrective stance, our major A, all concluded really towards the end of last year, beginning of this year. Of course, it was under so much pressure when it hit these lows that, in fact, we were looking for the market to go lower. For those who have been with me for some time, you know that we had forecast a low of about 1037. That was a Fibonacci-based number, and that was really the number that I was looking for, and we got fairly close to it. We got about 45, so we got very close to that number, and I feel as though what we have now seen at this point is a conclusion of the long correction that gold has been, this long protracted winter that really started once we hit these tops and began to trade lower. Now, with that in mind, my sense is that we have now entered a B wave. Now, a B wave is going to typically take you anywhere between 50 and 75% that of the move of A. So when you calculate the move of A being from 1920 down to a 1051, and then culminate or plot how far up it would go to reach a 50% point, it takes us to about 1475. And so my long-term view of the market right now is that over the next year to year and a half, this is a very, very long-term view, we will see this market slowly meander back up past 1200, past 1300, into the 14s, and possibly as high as the low 1500s. And as I said, that is based upon the fact that typically what you will see on a B wave is a move anywhere between 50 and 75. Now realize 75 would take us back up to 1600, but I'm not calculating that move yet. Now, where are we currently? Well, we're currently in an intermediate count, and this is our first wave here. Where's that wave going to culminate? Well, the one thing about Elliott wave is that we utilize our wave 1 as our benchmark. And so the only real way to ascertain where the market might go is to look at previous wave 1s in terms of an intermediate count. And we'll begin to do that on Monday and Tuesday. We'll also be very interested to see if this market finds support or if we go into a small correction within the marketplace itself. But my long-term view of gold has moved from bearish to cautiously bullish. So traders, we have seen the U.S. equities markets, along with the global equities markets, under tremendous pressure, a lot of it being very sensitive to crude oil prices. Take a look at crude today, up almost $3 on the day, just below $29 a barrel, a price increase of almost 11% on the day. You can really see the kind of activity or this huge spike when we take a look at our daily candle, that daily candle coming off of this low. The interesting thing, of course, there were statements that were made through some of the OPEC ministers that they could curtail production. But when we take a look at this particular bottom, we could in fact have seen some sort of a double bottom at about $26 per barrel, and in fact could see this market begin to spike back up next week. And traders, so lastly, I do want to take a look at the U.S. equities markets. First of all, Dow Jones Industrial Average, after seeing a decline yesterday at one point over 400 points in terms of a drawdown, I believe it closed off about 200 plus points. Now it is apparently going to close up approximately 300 points on the day. Talk about a roller coaster, just below 16,000, although it has traded very, very close to that. 15,969, that is the high on the day. Low on the day is 15,691. So we've seen about a 300-point range on the day, and absolutely going to close in very, very solid positive territory, which really brings us to our look at a Standard & Poor's 500, this vis-a-vis the E-mini. We're going to need to look at this both in terms of a weekly chart and a daily chart. But here's the first thing that we see. Tremendous recovery on the week. We've seen this before. Take a look at this price action here. Take a look at this price action here, 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 and here. This particular candle type where you have this long, protracted, extended range between the low and the body of the candle is either a doji, or depending on the size of the actual body, could be construed as a hammer or a hangman. Today's would be construed, except for a little bit of this tail, which is a little bit longer than you would like to see in terms of a pure identification. This is absolutely a hammer in the market. Hammers in the market tend to signal bottoms, and I am looking for higher pricing in the equities markets next week. My sense right now in terms of what we're looking at is I believe that we will see this market move as high as about 935. That is our 61% retracement. And I believe that from there, we will see one final leg down, and that will complete this correction that we are currently looking at. As of right now, I do believe that we are witnessing a correction and not a bear market. We would need to see an extended sell-off through this area, and we would need to not see what we are seeing, which is a very, very pleasant sight, of course, which is the candle type that came out today, in which we have this extended range between the low it reached this week and where it actually closed at, which in a red candle would be the bottom of this body itself. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you next week on Monday for another daily update and review. Maintain your current long position in gold, which is long from 1117. We are going to look on any kind of firm opening. We will want to ride this move up from 1859 to about 1930, because I believe we'll have a good long play in the S&P next week. Be interesting to see if oil also follows through. Have a great weekend. Bye-bye.